Hey everyone, we're Kevin and Julia, husband and wife, real estate investors and landlords. And today we're going to break down the basics of rental property taxation.
We've built and self-managed a portfolio of 10 rental units while working full-time W-2 jobs. When we first got started, tax season was overwhelming, but once we learned the basics, we were able to do our own bookkeeping and accounting without the stress.
And doing this right, meaning compliant with the IRS, is crucial. It helps you avoid penalties, and more importantly, it lets you use tax code to your advantage. If you're a landlord, there's a huge opportunity to keep more of your hard-earned money and grow your portfolio smarter.
Let's start with what the IRS considers rental income. And spoiler alert, it's a lot more than just the monthly rent check. Here's what counts as rental income. First, rent payments. That includes monthly rent and any rent paid in advance. If a tenant pays for the full year up front, you've got to report the whole amount as income in the year you received it. Next up, security deposits. These aren't taxable when you first receive them unless you plan to keep part or all of it. For example, if a tenant breaks the lease or damages the property, in that case, that portion becomes income. And finally, any other payments you receive. Pet fees, late fees, parking, laundry income, utility reimbursements, all of that is considered rental income and needs to be reported. If money is changing hands, assume it's income unless the IRS specifically says otherwise.
Okay, now for the fun part, deductions. These are your best friends as a landlord because they lower your taxable income. Let's go through some of the major ones we use every year. Number 1, mortgage interest. This is usually one of your biggest deductions if you have a loan on the property. Number 2, property taxes. Local real estate taxes are fully deductible. 3, depreciation. This can seem confusing, but it's simply the wear and tear on the building, not the land. It's what they call a paper loss that saves you money even if your property is cash flowing. This deduction is typically taken over 27 and a half years. However, you do have an option to do bonus depreciation and take more of those losses in year 1. The amount has been changing year to year, so it's best to consult your accountant for specifics, especially if you have high taxable income. Next, let's talk about repairs versus improvements. This is one of the topics that gets people most confused. Repairs are things like fixing broken toilets or patching drywall, stuff that keeps the property in good condition. Those are fully deductible the year you do them. Improvements, on the other hand, like new roof, kitchen remodel, or adding a deck, those have to be depreciated over several years, similar to what we mentioned about depreciating the building. You can't deduct those all the year you do them. Other deductions include insurance, legal fees, accounting costs, property management expenses, and any other operational costs you might have. If you pay someone to help maintain your property, like cutting grass, that's deductible too. There are many other deductions you might be able to take advantage of, so if you're spending money on your rental, chances are there's a way to write it off. Just make sure you're keeping track of it. To help consolidate all these deductions, plus a few bonus ones, we put together a free downloadable deductions PDF. You can find the link below.
Let's talk about how to actually keep good records and make tax season a whole lot smoother. When we first started out, we were getting rent through all kinds of methods. Venmo, checks in the mail, cash dropped off, even text messages saying I sent it. Trying to piece all that together at tax time was a nightmare. That's why we switched to using Avail. It lets tenants pay rent online, on time, and the best part, it keeps clean, automatic record of every payment. No more chasing down who paid what or digging through old bank statements. Everything is organized for you, the dates, the amounts, payment history, all in one place. It takes the guesswork out of tax prep and gives you peace of mind that your income records are solid.
Taxes can feel overwhelming, but if you keep good records, understand your deductions, and stay organized, you can take full advantage of the tax benefits of owning rental property.
And for more complicated situations like short-term rentals or multi-member LLCs, we definitely recommend working with a CPA who understands real estate.
Big thanks to Avail for making landlord life a little easier and for partnering with us on this video.
If you found this helpful, be sure to check out more tips and tools from Avail, and we'll see you in the next one.